Bitcoin is fairly successfully finding support in this range right now, which to me is a pretty good sign, right? I mean, look, overall, we're in a really bad place in this market. Let's just cut the shit and get straight to the truth here. The market is not looking super healthy, in my opinion, but considering that Bitcoin managed to rally up to 44K and is now finding support at 42, we are maintaining, broadly speaking, a pattern of setting higher lows in this market. Bam, with a low right here and potentially a new low right here, especially if Bitcoin continues to rise up. So I want to show you where this thing could be going, and unfortunately this video isn't going to be as bullish as I've made it sound at the beginning here, because actually I think that Bitcoin could be forming a very large, potentially extremely dangerous pattern on this chart, which could actually take it all the way down to $23,000. So I'm going to break this down for you inside of this video as well. Stick with me as we go through it. If you're excited for this video, do me a favor and smash up the likes as we get straight into this. And so here's the thing, before I get on to why Bitcoin could be looking at that low $20,000 range, and I'm going to give you a lot of very precise analysis for it, right? I'm not just pulling these numbers out of my ass because I want to make a clickbait video. There is real analysis behind this, because of course that's what this channel is all about. See, the thing is again, like I said, just looking at this very short-term chart at the moment, I am liking what I'm seeing. You know, one of the main things that to me has got me a little bit, I mean, I don't want to say optimistic, but certainly, you know, I like what I'm seeing is, and it's actually the same thing I covered in a recent video. If you're subscribed, you'll know all about it. Is, you know, if you take a look at this rally right here, we can see some fairly, let's actually zoom in onto the 1 hour time frame. You can see some fairly nice volume spikes in the market, right? Let me really highlight this extremely clearly for you guys, because I think that this is quite important. You know, take a look at this, right? So volume peaking up, looking at the volume moving average right here, peaking up directly after every kind of move happens on this chart right here. You know, if I draw a couple vertical lines showing us when Bitcoin was rising up, you can see that it's almost always on this small section of rallies right here, just this 1, 2, 3 big moves up that Bitcoin had earlier this month in January. We were seeing a nice little, you know, peak in volume after each of them. But if we zoom out just a little bit more onto the 4 hour time frame, we can really start to get a sense here of where, you know, when the market started trending down up to about over here, you know, we saw the volume dropping, right? And this is the same thing that I was outlining to you guys again in one of my very recent videos, so you'll know about that if you're already subscribed to the channel. But one of the key things I was mentioning to you is that because we were seeing volume actually looking pretty good on these three major spikes, they're not even major, but these three, you know, clear spikes in volume, I was saying hopefully we find another spike if we start finding support in this level. And look at that volume moving average again, just focusing on this orange line. This is the average of our volume bars, showing us that we're now kind of angling upwards. We're gaining volume in the market as we're falling down to a support level. That's a really good sign, because ladies and gents, if we break down exactly what we are seeing here, essentially what the market is telling us right now is that people are, you know, not really selling as the market drops down. It's just that no one's really buying. However, people are actually generally a little bit more interested in trading, in this case buying Bitcoin, down at the $42,000 level, because they're expecting it to be a good area of support. And to me, that is very significant, right? That tells me that people are perhaps a touch more optimistic than they were previously when the market was finding support at lower levels. And to me, that's a really good sign. The thing is we need to, I mean, this is the thing, we need to overcome a lot of resistance if we're going to be rising up. You know, one of the key areas of resistance I'm seeing right now is just this rising wedge line that Bitcoin had that was supporting it higher for a little bit of time throughout this month, right? I mean, Bitcoin was using it pretty nicely as support, and unfortunately we turned it into resistance. You know, when we dropped below it, we immediately came back up for that kiss of death, which I told you guys was a really bad sign. We again got the very same move with another rejection, and they're actually, you know, potentially increasing in intensity. I mean, if you take a look at the first rejection to the low, Bitcoin fell by 2.6%, and from this rejection to the low, Bitcoin fell by 3.6%. We didn't quite hit the line on this occasion, but we came really close to it, so I am going to count that as a rejection as well. But again, we're still, this is the thing, and it's so obvious on the 1 hour time frame, we're seeing a very clear increase. Look at the volume here, look at the volume here, a very clear increase where the market was moving down, no one was really interested, but now with finding support, and people really seem to be a little bit more optimistic, not even optimistic, but just generally, you know, people want to put their money through in the market right here, which again, at a support level is the healthiest thing that we could possibly ask for. The thing is again, I mean, if we look at the slightly larger time frames right here on the 4 hour, and we switch this to one of my, as you know, favorite indicators, the Ichimoku cloud, you know, it's pretty clear to see that there is just a lot of resistance on this chart. And again, one of the key things that I was warning about for quite a lot of time on this YouTube channel is that, you know, these resistance clouds are going to keep on getting lower and lower as long as Bitcoin stays below them, right? And so whereas previously the low point of this resistance was at 44.2, currently the low point of this resistance is at about 43.1, and you know, literally within 2 days it will be down at 42.5. So we're seeing a big drop in these resistance areas, basically showing us that, I mean, yeah, the market is it's going to encounter quite a few more challenges as we rise up. However, one of the things that makes me a little bit more optimistic about this cloud is just the fact that Bitcoin has already found resistance from it twice. The Ichimoku cloud, like other indicators and tools, in my opinion, will generally not work as well the more we test it. You know, it's one of those indicators where, you know, like I say, the more we test the support area like this red line, the more likely we are to break it. It's just classic technical analysis theory. I feel like the same thing applies to Ichimoku clouds, and I want to bring your attention over to what happened right here, where Bitcoin was interacting with the very same 4-hour resistance cloud right here, and we found a couple rejections from this cloud, but obviously the more we traded in and around the cloud, the more likely we became to break it, and then we ended up getting a breakout to the upside. This is already foreshadowing what I'm going to talk about next, though, which is that breaking the resistance cloud is not enough. This is the problem that Bitcoin is facing right now, which I've outlined quite a bit on this channel. Again, make sure you're subscribed so you don't miss out on this content, because you would already know about this if you're a regular viewer. But the thing is that if Bitcoin manages to break this resistance level, which at the moment it stretches all the way up to $46,000, we're then going to have to start looking at some of these larger time frames. And the issue that I'm seeing right here on these larger time frames is that we've got, for example, daily EMA resistance. It's actually a lot lower right now, but it stretches all the way up to 47, which is to say that as soon as we leave one area of resistance, we're already in another area of resistance on a different time frame. There's a lot of confluence here. You know, this is the thing that, you know, real analysts look for in the markets, is we want to see, do we have multiple different unrelated tools giving us the same conclusion, in this case, that there's resistance ahead where we are at the moment. And we do. That's the thing. It's like multiple different indicators on multiple different time frames are showing us the same bearish signs. Now, that doesn't mean that the market actually needs to drop down. I mean, this is how it always looks at major market bottoms. I mean, if we take a look at the bottom that we had over here, there was so much resistance that Bitcoin was facing. And granted, it was working as resistance many, many times. I just want to make this point very clear, because a lot of people will look at this in hindsight and be like, oh, well, the EMA failed, and they'll stick their finger up their fucking nose being idiots. But the reality is, ladies and gents, Bitcoin found quite a few serious rejections out of this EMA ribbon, where if you were betting along with the EMA ribbon, you would have been right more often than you were wrong. Even though there's one instance here where it's absolutely terribly incorrect, a stop loss would protect you from that, and if you were trading the short side using this EMA ribbon, you would have made 4 pretty decent profits right here. At least 2 really, really nice profits, where if you look at how deep we penetrated the cloud and then how low we dropped, that is a 30% drop. My God, if you're trading that on even 2 times leverage, it's a 60% profit. $100 would become $160. That is no joke. 3 times leverage, and you're looking at doubling your money. You know, the reason that I'm pointing this out is that this is what we need to do as traders, right? This is the thing a lot of people don't get, and you'll see this when you join 4Fly's VIP, because this really blows a lot of people's minds, is that you don't actually need to be correct about the overall move in the market. You just need to be able to time your positions so that you can get in, even if you're trading the wrong side, so that you can get in on the right swing, leverage it up in the right way, and walk away with a profit unscathed. That's always the objective. And obviously it doesn't always work out that way, right? My most recent trade, I told you guys about this in yesterday's video, my most recent trade on Phantom, I ended up losing a little bit of money on. But it's about understanding where the risk is. You know, I knew that that would be a higher risk trade, so I told VIP members I wasn't putting too much money in. And of course, you take those risks, and you make calculated risks, and sometimes they don't work out. But the objective is that most of the time they will, and you'll walk out with more Bitcoin than you entered the arena with, so to speak. And if you want to see how I aim to do that in these markets and how I've been able to do that over the years in these markets, then you can join ForFly's VIP. You'll be able to watch me trading in real time, where I tell you everything I'm considering and everything I'm doing in these markets as I formulate those ideas, by clicking on the first link in the description down below, then clicking on the @ForFlies button at the bottom of any post inside of ForFlies Gold, and then send message to ask me how to join. But bringing it back to the chart right here, like I said, quite a bit of resistance that this market is going to be potentially facing in this market right now. And that's the problem, is it doesn't really get worse. I mean, as soon as we break this area of resistance, we do have a nice range to rise up, but look at where this Ichimoku cloud is. And this is where we start getting down to that $20,000 price level I mentioned towards the beginning of this video, because the thing is that if Bitcoin manages to rise all the way up into this level and gets a rejection, if I zoom out, I'm wondering if you guys can spot this. Just pause the video here and let me know if you already know what I'm going to be talking about here. I'd be very interested how many of you guys have already noticed. But yeah, Bitcoin is potentially going to be forming hang on, let me draw it for you, a head and shoulders pattern. And you know that I don't usually talk about patterns like this because I think they're actually, if anything, a little bit fucking childish. But at the end of the day, Bitcoin is forming one right now, and if we end up finding resistance up here, which is so likely, and I'm going to show you why in a moment, we're potentially going to be forming a pattern that looks a little bit like this. And for those of you who don't know, lucky you, I hate these patterns, to be very clear with you, and I'll tell you why in just a second. A head and shoulders pattern is generally considered to be quite a bearish pattern, and what it means is that we've set a high and we managed to break that high, but then we fell down and we subsequently tried to break that same high again, but we couldn't, and we found resistance where we previously found resistance. This basically means that we had a little bit of strength, we lost it, then we had more strength and we lost it all, and then we managed to muster up a little bit of strength and we lost it prematurely again. Another way to really understand what this pattern means from a psychological point of view, because guys, this is really important, right? You can read Head and Shoulders in a textbook or in a YouTube course or something, and you'll understand what it is, but you won't know it on a deep level. I like to use analogies for this on the YouTube channel. You guys know that I make a lot of bad analogies, and what I'm seeing here is you've got a fighter that is standing up after being kicked down, but he only gets up to his knees and drops again, and then he manages to stand up on his 2 feet, but he drops again, and then he manages to only get up to his knees and he drops again. He's going through these fluctuations of energy, but of course it's not able to be sustained, and so naturally he falls through the floor, maybe tries one last time where he's only able to get onto his elbows, but again collapses, and that's where the really big shitstorm begins. The thing with this pattern is that we get the target by actually drawing a line from what's called a neckline down here up to the top of the head, which looks a little bit like this, and then we can use this to extrapolate a target to the downside. And clearly I've drawn this incorrectly because my target is $15,000 on this chart. So 1 second, bear with me while I try and get this right. My bad. Yeah, so I'm looking at the percentage move in this market, not the dollar move. So in this case, what I'm going to do is actually measure the downside drop right here from the high to this low. That is a minus 40% drop. And to show us where this might go from the neckline, I'm going to measure down another 40% drop, and this puts us at about $24,000. So that's more like what my analysis was telling me before I started to record this video, showing us that basically the range of this head was a 40% move. So another 40% move to the downside would take us down to about 24K, which is, by the way, if you were watching the channel back here when everybody was thinking we'd fall down to 20, I was telling you guys that 24 was one potential bounce zone. Not to say that we would get there, but that if we did, 24K is where we could potentially expect a little bit of support. 23 is also actually the bottom of that bounce zone. So I guess both levels matter there. Now, I want to move away from this for just a moment and talk more about this right shoulder. The first thing I want to say is we haven't even formed the right shoulder yet. I mean, it's so early to be talking about a head and shoulders patterns. I mean, a head and shoulders pattern. These patterns aren't even real until we break below the neckline and retest them. Those are the conditions we need in order to say, all right, this whole thing was a head and shoulders. We haven't even done that yet. We haven't even formed the right shoulder. But here's the thing. Is that the right shoulder, keep this price level in mind, 41.5. This is where the right shoulder roughly rises up to. This is an area which I think is going to be very challenging for Bitcoin. And my reason for saying that is that, see, on this trend, Bitcoin kind of set a few highs, like generally in a downtrend we set quite clear highs. Like this is a very clear high, this is a very clear, maybe not so clear high, this is a fairly clear high, this is a very clear high, and here's another one right here. Now we know that we're out of a downtrend when we break those highs, and so on this occasion the high was set, I know you can't see the price level, but it was set at $36,000. We managed to break that high on this candle, and that's when it was very clear that we were out of a downtrend, right? Again, on this chart, I suppose actually let's take this chart. We set a high right here, and then another high right here, and then another high right here. And so as soon as the market managed to rise above this most recent high, we knew that there was probably a pretty good chance the market's going to be turning bullish again. But as soon as we broke above this high, because this was the most clear high that we had in this mini downtrend, this is at 49,000. This is where again it becomes pretty obvious that the market is probably in a bullish place. Now, the two highs that I'm seeing for this chart are right here at 44,000, which I've spoken about earlier in the video, and I'll speak about a little bit more as we go further into this video. But more importantly, the most clearly profiled high in this whole downtrend, the one that I was predicting on the YouTube channel while Bitcoin was trending down and nobody could entertain the idea of Bitcoin rallying up. But 4Flies was here telling you guys that we needed it and we were due for it, and nobody would believe me on that, which is exactly why I screamed it so loudly. Again, smash up the subscribe button if you haven't already, because you're missing out on such valuable content which really is so independent of the rest of the sentiment in the market. Because to be honest, I don't engage in that stuff. I do my own analysis. I've got my own, what I would believe to be a world-class analyst on my team, trained by me, and we do our own thing, and we don't care about what anyone else does. And that's why we are so consistent with our analysis. That's why you guys have been able to spot this, and that's why people have turned into killer dangerous traders inside of these markets after jumping into 4Flies VIP by following these 3 quick clicks on screen. The thing is that this is a very important high in the market, and it lines up with that Ichimoku cloud on the daily time frame. Again, when I talk about confluence, this is it. This is confluence. You see, if Bitcoin manages to rally up into this level, look at exactly where it's going to be finding resistance. It's scary. Like, it's honestly scary. And the thing is that because this was a prior swing high, this is going to be a relatively difficult level to break, in my opinion. And this area, 41.5, actually, in my opinion, stretches all the way up to 53,000, because this is the range that Bitcoin previously had a major top in. This is also roughly where Bitcoin found a fairly significant bounce, and another bounce right here. And then just historically, it's been quite an important level, right? We consolidated here when we set an all-time high, then we managed to rise up. Look at where we found resistance when we dropped below the level. Look at where we found a very major area of support, which actually triggered not only a 29% rally within less than a month. Actually, how long did this take? It was a 3 weeks for Bitcoin to rise up by 29% off this support level. So not only did we get a big rally, we got a quick rally, and it came off that, and it was a brand new all-time high. It came off that 53k level, and then of course again, some more interactions with this area, some more resistance here. Look, as soon as we drop below this level, look at what we backtest before dropping down again. The reason that I'm highlighting this stuff to you is that it's very, very significant price action around this level that we've had historically, and Bitcoin is going to potentially be entering this exact resistance range, in my opinion, man, really, in my opinion, from a position of weakness. Dropping down by 40%, the market's got to be pretty crippled to do that. And yeah, I fully believe that this is a good area of support, and that's why I don't really, until we break that low, this is a really weird thing to say out loud because it's actually very obvious, but until we break that low, I'm very confident that it won't be broken, which is, now, how do I say this on the fly? Because I know everyone's putting me on the record when I'm 19.5 minutes into a freestyled video. Yeah, fuck me, I'll make a mistake with my speech. But I suppose what I'm really trying to say here is that the 40k area is very significant in my opinion, and put it this way, I'll be mildly surprised if we break it. I just don't think that we're going to be breaking the 40k support level in any significant way as it stands right now. At the moment, I don't think that's the case. And so I do see a good amount of strength for the market. I absolutely see sellers hopefully getting exhausted and so on. But that doesn't change the facts. And the facts are that Bitcoin managed to set weak all-time highs consistently in this trend, where its all-time highs are only a few percentage points at best above the previous all-time high. You know, no significant rises and then a top, nothing at all like that. Then triggered a really bad downtrend and approaching resistance levels. I mean, you can't blame me for being skeptical of the market at that point and seeing that it lines up with one of the most, in my opinion, dangerous signs of resistance in this market, which is the Ichimoku cloud. It's just not giving me all the confidence that I want in this market right now. And so that would potentially be forming the head and shoulders pattern. And this is the thing, is that if we do manage to drop back down, we would have another opportunity to set a low right here. You know, I mean, I would actually quite like this, because that means we're having some pretty nicely spaced out tests of the $40,000 level if we end up managing to bounce up from here. If we do, that would be phenomenal. I'm not saying we would, but that would literally put us in, I mean, a multi-month, you know, bear flag pattern. It would be one of the healthiest things that could happen to the trend, and you best believe, ladies and gents, you best believe that if Bitcoin did something like this, we are easily looking at an explosion to $100,000, you know, off some sort of consolidation like that. It would be so shit. It would be so painful to sit through, but this would be the ultimate combination of a price-based correction and a time-based correction before blasting off to the moon. And, ladies and gents, might I remind you that Bitcoin has already done that. A price-based correction, a time-based correction, and a face-melting rally. At this point, we would only potentially be doing the same thing, but from a higher level. You know, previously the rally began at, say, 30,000. This time, maybe the rally starting at 40,000, and I'm sure that we would set significantly higher all-time highs off something like that. I'm not saying that's going to happen. Honestly, that is more of a wet dream for someone like me, but I'm just putting it on your radar. These are things, this is how markets move. Like, a lot of people have these weird expectations that we move down in straight lines, we move up in straight lines. That's just not how it works, ladies and gents. It's always a jagged path. There's always going to be shit that happens in between it. You know, this was not a movement of straight lines in the market. I mean, we're moving up and moving down and moving up, and you know, then we have these stupid, painful reversals in between, right? Like, this is how markets operate, and that's why I'm just trying to bring a dose of, you know, just sprinkle a little bit of realism in this market right here. But anyway, let's go back to this head and shoulders pattern before I get off track again. And the thing is that if we do end up breaking down below this area and then coming back up for a back test of resistance, this would be one of the most awful things that could happen in the market, in my opinion. It would also be one of the easiest, most obvious sell opportunities of my life if Bitcoin manages to fall below $40,000 for any significant period of time, meaning at least a few days, and then coming back up to back test this area. That would be an extremely obvious short position. It was before, by the way. Look at this right here. Bitcoin fell down, came back up, tested it, got rejected again, tested it, got rejected again, tested it, got rejected, right? So we'd basically be looking at a similar opportunity right here, but obviously being in a very, very weak state in the market. So, you know, that could potentially lead to quite a disastrous drop. And I suppose one of the biggest problems for Bitcoin right here is that not much trading has actually taken place between 30K and 40K. And generally, when Bitcoin was trading between these levels, we would zip straight up and zip straight down and zip straight up and zip straight down, and many, many, many occasions here of moving all the way down and all the way up and all the way down and all the way up and all the way down and all the way up. It's just what Bitcoin does in this range, right? And so, you know, obviously there might be a little bit of fluff in between, but for the most part, it's pretty clear that if Bitcoin does manage to fall below this area, we're going all the way down to 30K, and the area below 30K is far more treacherous than this gap right here, because there quite literally hasn't been any trading whatsoever between the $30,000 range here and the $20,000 ranges down here. There's just been no trading. Simple fact. I'm not trying to scare you guys. If you're getting scared, get the fuck out of this market because you're way too you're way too sensitive to be in these crypto markets. If you hear me giving you analysis like this, just spitting straight facts, ladies and gents, and if this makes you uncomfortable, go back to your XRP army, wipe your tears with your Venezuelan dollars that aren't worth shit because you don't have enough respect for your own money to grow it. So you're dealing with hyperinflated cash, which you want to like, I don't know, buy Lambos with or whatever your aspirations may be. You clearly have your head in the wrong place if you're getting scared by analysis like this, because this is just a straight fact. There's absolutely no trading that took place in figurative terms. Obviously, literally there was trading, but in figurative terms, metaphorical terms, there's no trading that took place between these two price levels, and so we cannot reasonably expect any support in this range. And that is why if we manage to drop below 30k, that's where things get really scary. We potentially drop a lot harder. But the good news, in my opinion, is that if we do manage to get a drop like that, just think about how easy it would be to rise up. It's going to be easy to drop down. Pardon me, it's going to be easy to drop down, and so naturally it will be easy to rise up again as well. It's the very same thing that Bitcoin did right here between 30k and 40k, where it was very easy to rise up, so it was very easy to rise down, but then again, it was very easy to rise back up again. This is just what the range looks like to me, and I think 20k to 30k would be even faster. Really, really important point, guys. You're 26 minutes into this video, and if you've made it this far in, clearly you've got a pretty good attention span. Thank you very much for that. But if for some reason analysis like this scares you, and like you just trust me on this as a trader that's been in the market for quite a few years now in the crypto markets, you need to get out. You are just point blank, you're way too sensitive about this. You may as well be, like I said, in your hyperinflated currencies that you just get from your paycheck, and just go back to your simple life. You're not cut out for it. And there's no nice way to say it. Like, you should feel shit about it, and you should leave, because I can promise you're going to feel a whole lot more shit when the market does actually scare you and you cave in at the very bottom because you were weak from the beginning. Just don't do it to yourself. Go do something else. I don't know, ask your boss for a raise or something, because this ain't going to work out. That's just my take as somebody who's been in these markets now for going on to my 5th year, which is not only an absolutely huge proportion of my life, but also a much bigger proportion of Bitcoin's life. So I've been around for quite a while as a technical analyst, and one of the things I think I said earlier on in this video is that TA is simply a study of psychology, right? What we're doing with technical analysis is we're studying psychology in numbers, and so this is a real science which we're quantifying, which we're identifying patterns with, because humans are chock full of patterns with psychology. And again, like, if that kind of stuff makes you uncomfortable because it doesn't agree with your with your investment strategy, you're in trouble. You really are, because reality isn't going to change around you. You are going to have to change around reality. So that's the point that I'm going to leave you guys on. If you do want to trade on the very same exchange that I'm using, you already know the deal. Bam, Bybit link right here in the description, and you're going to get up to $4,100 for free when you sign up using my link in the description. This is free cash for you. Again, all you got to do is sign up and make your first deposit on the platform, but this is a limited time offer and it's nearly ran out now. So if you want to take advantage of it and you want to get some free money, you don't have to trade on it. You can withdraw your cash straight away as soon as you get your deposit, but it is free money and it's a time limited offer. If you want to get it, you need to follow the link in the description down below to sign up to Bybit. And if you want to be able to watch me trading in these markets in real time, navigating my profits, navigating my losses, formulating strategy in this market to crush it right now, today, on the 19th of January, 20th of January, wherever you are in the world, it's all going down inside of 4Flies VIP every single day. So if you want to jump inside, click on the first link in the description down below, and then on the @4Flies button at the bottom of any post instead of 4Flies Gold, and then send message to ask me how to join 4Flies VIP, and we'll get you in straight away. I really hope you have enjoyed this video, and if you have, you know exactly what to do. Smash up the likes, subscribe, tick the bell, and I'll see you all in the next one. Peace.